Hello, today's June 24th, 2016. Just had a major event. Britain has left the European Union and it's shaken some markets up, so we're going to take a look at the pound today. What I've done is I've created a monthly price map structure. So this is a daily chart with a monthly structure. Here's a downside pivot, upside pivot, and here's our R level. Before I get into that, I want to go over the historical. Here's a monthly chart, and here's the current June R level at 145.07, and I'm looking at the Forex cable. So historically we've got the market approaching some good support areas here, and it also matches up with our DT1 target at 131.41, and the extreme this month is at 122.47. Comes in here. So this type of dramatic volatility, we've seen it, and to put everything in context, it's not even close to what we occurred here and in some of these other historical events. Time will tell. So we're taking a little deeper look at the daily and what's happened over the month. We did have the market rotating around the directional R level, so we have that kind of classic internal as the market prepares for this event. Gives us a head fake to the downside, taking out the CRX minus, and then doing the same on the opposite end above the CRX plus to ultimately fail. Dialing in a little more micro, we take a look at an intraday chart. This is a 30-minute. You can see how the market broke out to the upside here, holding the level, giving us a false signal, and then failing. Dialing into a 10-minute chart here, just to get a little more granularity. So we have the R level, that's sentiment bias, and so overnight, just watching how this price action working within market structure. That's what we're always looking at. And here we have our failure below the downside pivot, and then the retracement back up to sentiment. So market follows through on its breakout signal and attains 2 APMDs down to the DT2, and then some, falling just shy of the DT3 target at 131.41. So currently the market has broken this aggressive emotional sell-off momentum and is in a somewhat of a digestive trade, rotating between the DT1 at 138.94 and the DT2 at 135.93. Again, this is the monthly structure. So the current expectations, for the market's next move, are we going to resume some emotional selling? Are we going to make a play for some historical lows? That decision should be made with a breach of either 138.94 or failure from 135.93, and we can use the 137.43 as more of a rotational level. So we get above 138.94, and we anticipate this market to try to further correct and get a play back up to, say, the 143.51, if not a retest of the 145.07 level before it ultimately makes a decision what it wants to do. And if we get a failure below 135.93, that's going to bring back this aggressive selling. The market's going to start to really lean heavy, especially on a failure from 134.42. And that's going to put our 131.41 DT3 back in play, if not, going for our extreme at 122.47. Any questions? Please feel free to contact me at info@jservices.com. Good luck.